Okay, so this is US stock trading. Now, the essence of this webinar basically is to help us diversify our equities portfolio beyond our local currency, which is Nigerian Naira. That's the essence, because we can't all be limited to the local stock markets. Yes, there are members that will say, I prefer Nigerian stock markets, which is fine, which is perfect. There are others that will say, oh, why not give us access to US stock markets? Because I want to expand, I want to invest in USD. Now, other members would want to take the hybrid approach by saying, okay, I can actually try both markets. Let me try the Nigerian stock market. Let me try the US stock market. So, whichever one you want to do, one thing is very important. Make sure you adopt a capital allocation strategy that fits into your risk profile. So, what I mean by that is don't just put all your money in Nigerian stock markets and don't put all your money in US stock market. So you can do a mix of both. While you are doing a mix of both, you can also adopt some balanced approach by ensuring that you are not too exposed to one, depending on the state of the market. So this is very important. Now we're looking at how to diversify beyond our equity portfolio, which is Nigerian Naira. So why should we do that? Why is it important? So let's look at some of the things that we'll be learning in this webinar. So number one, I'm going to show you one reason you should trade US stocks. One reason you should be trading US stock. I'm not talking about three reasons, for just one single reason why you should be trading US stock. It's important. Technology has made it so easy. If it was some 5, 10, 15 years back, I know how difficult it was trading US stock because a lot of US brokers, the moment you open an account with them and you select Nigeria, in short, it's like they've designed that platform to reject you the moment you select Nigeria. The next thing you see is you are not allowed. Your country is not permitted. Or some of them will tell you we are reviewing your application, and then in less than 24 hours, they will send the mail to you and say, oh, due to regulatory reasons, whatever, we are not able to accept application from your region. You know, they give you different reasons that make you feel like, oh, it's simply because you're in Nigeria. But I'm glad we have platforms right now that are opened up. I'm glad some guys are able to take up that challenge. And then now we have several platforms that allows us to trade US stock. So, however, I'm still going to show you the one I use and the one I prefer and the ones I'll be using more for US stock trading. And then I'm also going to show you my favorite strategies to trade US stocks right now and why it works. Yes, I've actually tried US stocks multiple times, and then I maintain different portfolios and I try to test some strategies to find out what works, what doesn't work, blah blah. So I'll show you what is working for me and what I've been doing right now. So in short, it's almost like me um trying to review all my portfolio and go with this particular strategy. And I'll show you why it works almost every time in the market. Then we'll also discuss the risk management ideas to protect your capital, how you should be protecting your capital in the market. So you don't just think that anytime you buy a stock and then you go sit down. Now, note, US stock market, it's not like Nigerian stock market. So I need to discuss that. Is important. In Nigerian stock market, there is a bit of control in terms of how stock prices appreciate or depreciate. But in US stock market, there's no limits. So in Nigeria stock market, a stock doesn't go up more than 10% per market section. But in US stock market, a stock can do 100%, 200% in a single day. So that's to tell you that that market is very risky. At the same time, there's return, there's also high risk, high return. In Nigerian stock market, you can't compare the risk with the US stock market. Now, in Nigerian stock market, when a stock is crashing, because there's a 10% cap, it means that if the market holds that stock at 10% deep, between between the market closing time and then the next opening hour, there could be breaking news that will change the whole scenario. And then the next day, the market might start rallying higher. So you might probably think that, oh, this is a stock that was going down yesterday, and suddenly we saw the stock pick up. Why? Because there was a news that actually broke out between the closing hour the previous day and then the opening hour the current period. But in the US, it's not like that. When a stock loses, when a stock posts bad results, the market, in short, there's no mercy in the market. It's like red ocean. The market will give it what it deserves. A stock can drop by 20% in a day, and a stock can rally higher by 20% in a day. One of the things I'm going to be sharing with us when I'm discussing this strategy is that we are going to try as much as possible to avoid buying into stocks that are about to release their quarterly results. That's one of the risks a lot of people don't consider in the US stock market. If you're going to buy a stock, you didn't know that the company is actually about to release its results. When I find such kind of stock, even though there's a lot of positive sentiment or expectations that the company will do well, I try to reduce my portfolio. I try to reduce my stake in that company. So if it does well, if it performs well, then it's fine. But what if it goes the other way around? And you, like I told you, US stock market is there's no cap to how many percentage a stock can go in a day, either to the upside or downside. So risk management is extremely important. And then I'm also going to show you one or two US stocks that I'm buying that I bought between Thursday and Friday, and I think that it will likely continue to do well. And I will share my reasons, and then from there, and I will then discuss how to get more of my picks every month. Now, the model I'm going to be using in the US stock market, it's not going to be the same as Nigerian stock markets because I need to ensure that I manage my time effectively, and then also ensure that we only trade limited number of stocks until we see results. So that's where the difference is going to come from. So that means we'll most likely be having stock of the month in the US stock community, stock of the month, where I will say, okay, these are the stocks for September, these are the stocks for October. Now, everything that's going to happen within that month will most likely be tailored to that stock, meaning that we're going to stay on this stock until we get results. So there's nothing like we bought this stock and then we bought another stock, and then we're confused on whether we should buy this and sell this. Now, there is something I like about the US stock market. In short, the US stock market is so advanced that I have an automated Excel sheet. So which I'm going to share with members. So unlike the Nigerian stock market, US stock market has an automated Excel sheet. So with that automated Excel sheet, as the market price is changing on the real time, it will be reflecting on your Excel sheet. So you can even use that to build your own personal stock portfolio. So unlike the Nigerian stock market where you would have to update the price manually, in the US stock market, you don't have to do that. I will give you an access to my Google Sheets that updates stock prices every time. In short, real time. As the price is changing in the market, you will see how that will reflect, and then you can use that to build your own personal portfolio. So if you have accounts with different brokers, you're able to use that Excel sheet to aggregate all your stock holding on one place, and then see how they are doing. So that's what I'm going to share with you, every member of this US stock community. Then let's look at the first part. One reason you should trade US stock. This is not something I think is new. It's something we are all aware of, but I just need to stress it. And I'm going to spend a little time on this part. The reason is in the last 23 years, Nigerian Naira exchange rate to the US dollar has moved from an average of 100 Naira in 2000, to 767 as of today, which is like 666% currency depreciation. That's one challenge. That's the problem. So, meaning that if all your assets, all the money you have, home and abroad, are in Nigerian Naira, your wealth is actually exposed to exchange rate risk. Your wealth is exposed to exchange rate risk. I can remember sometimes where Dangote talked about moving 60% of his wealth to US assets. Why? Because of the effect of currency depreciation. So you can't afford to have all your money in Naira. It's a risk. That's a risk. If you look at the value of the Naira you had in the bank from January to date, it's not the same because of this simple reason. So today, dollar is selling for 955 Naira parallel market. And then I and E window is almost around 767 Naira. So, and the funniest thing, the bad part is that the trend is expected to continue in months and years to come. I'm not predicting doom for Nigeria, but I like to work with data. Some of us that had watched my video on exchange rate to income, I was clear on why the dollar will continue to rise against the naira. It's not a question of wish or I hope. There's no hope here. The structure are not there. The structure are not there. Our government is not recognizing the power of demand and supply. Recently, I got to read that the reason we've seen dollar appreciate in the last week is because most of the diaspora remittances have been channeled elsewhere. I say, is that? That's not an excuse. The structure on ground says that we have more demand for dollar than supply. How does Nigeria source for dollar? That's even the funniest thing. That's even the devastating part of this whole scenario. Nigerians source a dollar from foreign portfolio investors. That's even where the problem is coming from. Our source is from foreign portfolio investments. So these are not even dollar that's coming to Nigeria to develop our economy. If our source of dollar actually comes from exports, let's say our SMEs are selling their skills, their products, and then majority of the dollar comes from export earnings. That's a good part. So all CBN needs to do is to probably come up with policies that will encourage these businesses to bring in more. Now we are relying on two sources: diaspora remittance, and number two, foreign portfolio investors. Now, foreign portfolio investors are now saying that if you want us to bring dollar into your economy, then you must make your rate attractive. You must make return on your fixed income attractive. You must make return on your assets attractive for us so that when we bring in this money, then we'll most likely earn a return. And then if the CBN is going to dance to their tune, it's at the detriment of small businesses. So CBN is only focused on bringing in dollar just to please foreign investors. And then the people who are actually supposed to bring in the dollar from export earning, which is a natural way. Because if I sell my product to you, you're supposed to pay me. If I'm involved in exports and I sell to a buyer in Germany, then I'm supposed to earn euro. So the more euro I bring into Nigeria, then the more I'm able to help stabilize the demand for euro and also naira. And then as I'm growing, I would also want to employ more people because I know that I have access to buyers. My business is growing, but the CBN is not looking at it from this perspective. So that is where the problem is coming from. Our source has been foreign portfolio investors right from day one. Now, recently, we also saw that foreign portfolio investors are now investing in Nigerian stocks. And in my head, I'm like, this is not a pleasing news for me personally. Why? Because these guys are coming in with their dollar, and what their dollar is doing is to look for another money to make rather than developing the economy. If all this dollar actually comes from foreign direct investments, which is where I'm always keen to appraise the CBN. If this money is coming from foreign direct investment, yes, these ones are coming to develop our economy. These ones are coming to Nigeria to stay for 10, 15, 20 years. Imagine a company like Amazon. Imagine a company like Apple. Imagine a company like Toyota coming to Nigeria to say, we want to build our manufacturing plants. Maybe let's say we chose Ogun State as a site where we're going to be producing iPhone. Do you know what that means for Nigeria economy? If Nissan is coming, or Toyota is coming to say, oh, we want to partner with, say we want to build, or oh, let's pick one of these major states, or maybe a solar company is coming to Nigeria to say, oh, let's pick a state like Sokoto to establish a big, this is foreign direct investment. Now, the dollar they are bringing in would help to stabilize the demand. We have to meet up to the demand. Go to the bank today. There's so much backlogs of demand that the banks are not able to meet. So it's a pressure. It's a pressure. Now let me show you the charts of dollar to naira from 1998. Just look at the long-term trend of dollar to naira. It's obvious. So look at it here. You can see here, that's right from when trading started tracking exchange rates. You can see as at 1997, dollar was 82 naira. As at 1997, 82 naira. Now look at the trend. Look at the trend, how it keeps rallying higher. Now, when CBN adopted unification, you can see the huge spike in June. This was where a lot of companies suffered. How exchange rate moved from 468 to reach a high of almost 700 and let me see here. Let me look at the high here. Yes, to reach a high of almost 820. High an e-window. At least we saw the effect of this spike on a lot of companies' financial statements, from Guinness um, to to Unilever to Cadbury. You should name them. Most of these companies were impacted by this, and now some of them are coming up to say, "Oh, are we sure we're going to survive this FX losses? It's better we leave." And then so it's a trend that is not telling good stories about Nigeria. So if you're an investor or you're a trader who is looking to take advantage of opportunity in the financial market, you shouldn't just be making money or think of living or holding all your assets in Naira. This is a risk. This is a risk from 81 Naira to almost 767 Naira. A lot of members have been calling me, oh, dollar is Naira, 55 Naira. Should I sell my stock? Blah, 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 blah. I said, no, I am watching the I and E window. I and E window is where I am most concerned about, not parallel markets. So look at the rate on I and E window right now is 767. 767. So you can't afford to hold all your money in Naira. Now, even if you don't plan to trade US stock, what if you save in dollars? What if you save in dollars? I could remember, let me share a story. I could remember in 2020, early 2020 or thereabout, when dollar was 350 something Naira. A lady, she lost her husband during the COVID era. I think he works with one of the media houses, newspaper. So, papa, so while he was going to work, I think the trailer, whatever, and then that's how she lost the husband. So the money that he has saved with the cooperative, the salary and everything, so she didn't know what to do with it. And then she came to me like, oh, I don't know what to do with this money. What's your advice? Where should I invest this money? And all that. I said, you know what? Before you think of where to invest this money, number one, buy dollar. Just keep part of the money in dollar. Then you can maybe buy Euro bond. Euro bond is, at least to a very large extent, the risk is not as high as stock. And then she bought dollar at 350. Up till now that I'm talking to you, she opened a Euro bond account with FBN Quest. She still has that money in FVN Quest as of today. I still had the conversation with her 2 days ago. Now you can compare from 350 to almost 955. You can imagine the rate between 350 to 955. So even if you don't plan to invest or trade US stock, you must have a USD asset. A USD asset can also be your savings account, US savings account, even your DOM account. Let's not even go as far as investing in US stock. Your DOM account is also a USD asset. You open a DOM account is very easy. Just go to your bank. In short, there are mobile app, there are applications right now that have made it so easy for us to save in dollars. We have the piggy vest is there. You can save in dollars on piggy vest, but I strongly advise that you go to your bank because at least the reform right now is making it easier for us to access our dollar from our dollar account. Unlike then, where CBN, I think there was a time CBN was almost mandating everybody that owns a dollar account to liquidate their money or liquidate at official rates. So right now, you can actually access your dollar account and withdraw your dollar and then go to your BTC or sell at the current market rate. So these are the reason you must hold at least a certain percentage of your assets in USD. Look at exchange rate today. So let me show you at least one of the most visited websites when it comes to FX trade is Abuki FX. So look at the rate on Abuki FX. I think it should be as at yesterday. Here, look at dollar is 935. Pounds is 1,165. Euro is 995. Euro is 9. And if you check the trend in the last 2 weeks, 3 weeks, so you can afford so even if you don't intend to trade US stock, even if you've not gained anything, or you plan not to even trade US stock, just want to see at least this will help you. So that's one reason you should. Now, to move away from that, this slide, let's move to the next part. Now, what are the USD opportunities available? Now that we want to expand, now that I'm planning to move my assets, some of my assets away from Naira, diversify. Now, what are the USD investment opportunities available for us? So we're going to share four. Now, although the emphasis will be on US stock, but I just need to share this for some of us to see other opportunities. So it's not a must that when you convert your dollar or your Naira to dollar, then it has to be US stocks. You also need, there are other options available. Number one, you can invest in Euro bond. You can invest in Eurobond. What is Eurobond? Eurobond are bonds issued in a country's currency other than its home currency. So if Nigeria wants to raise dollar right now and it's going to international markets, that bond, they're actually going to sell out to investors in dollar. Even local investors can also buy Eurobond. So if the Nigerian government needs dollar, maybe they need dollar to shore up their reserve, they need dollar to okay, look at what is happening right now. Exchange rate is around 767. Now, if CBN is looking to intervene in this market. Oh, exchange is already high. How can we bring it down? Okay, let's see if we can sell dollar. Let's make dollar available in surplus. But at the same time, we don't want to deplete our reserve. So how do we raise dollar? Number one is either they sell euro bond. When they sell euro bond, they raise dollar. So most times when you see that CBN reserve is increasing, don't get too excited about it. I always see that CBN reserve increased by 10% in the last 2 months. That's not a good news because the source of that increase is a red sign. If the source of the increase is foreign portfolio investors, just like you see here, it's a red sign because these guys can take their money out of our economy anytime. But if they raise the money via foreign direct investment, that's perfect. That means they're doing a good job. Assuming the Minister of Finance and every other related agencies, they approached international investors and they're able to woo these guys to come establish an investment or manufacturing plant in Nigeria. Then that's a good one. And they said, oh, our reserve has increased by 10% in the last 3 months. And what's the source of that increase? Foreign direct investment. That's a good one. But when your foreign direct investment is increasing because of this hot money, Eurobond, it's not a good news for me. So one of the ones you can invest is Eurobond. And there are so many Eurobond mutual funds in Nigeria. So you can even ask your broker, you want to invest in Eurobond, they will guide you on how to invest. Some Eurobond are even tradable. So through Eurobond, you are able to invest in USD as you're able to diversify to USD asset. And then on annual basis, they'll pay you a return. As at the last time I checked, it was around between 6 to 7%. I don't know what it is right now, but I know Eurobond most times is tied to the risk in an economy. When economic risk is high, then investors tend to demand more return to be compensated because of that additional risk. And when interest rate is also increasing, it also affects Eurobond. So, but the major attraction, the major juice on Eurobond is currency devaluation. When you look at the returns on Eurobond in the last 10 to 15 years, over 50 to 60% of the return on Eurobond are tied to currency depreciation, not really the interest rate. If you look at most of these mutual funds that are selling Eurobond offers, telling investors to come and invest in the Eurobond, you will see that one of the major perk on their advert is currency depreciation. So you are actually diversifying to take advantage of currency depreciation and not necessarily the return. So let's assume that in 2020, you can see right here in 2020, dollar was around 360. You can see here, dollar was 360 in 2020 here. So imagine you bought Euro bond worth of $1,000. That's almost 359 or 360,000 Naira. So if you still have that $1,000 in your Euro bond account, maybe with FBN Quest or FSDH or Stanbic IBTC, whatever broker you chose to use or mutual fund. Now, it means the Naira equivalent of that $1,000 right now is around 767,000 Naira using an E rate. And if you're to withdraw the money and go sell it to BDC, then we should be looking at least 900,000 Naira. You can see the increase in 3 years. So if you look at 900,000 Naira minus 360,000 Naira, so that's almost 540,000 Naira. So 540 divided by 360. Your portfolio should have increased by 150% between 2020 to 2023. That's the 3 years. So if you factor in the interest return on it, it should be more. But you will see that the bulk of the return on Eurobond are tied to currency depreciation. So you have hedged against Naira depreciation. So if you have a Naira asset that is going down because of this depreciation, at least this will help you net off the losses on that asset. That's the essence. That's why you have to diversify. So it's not a must that your diversification must be into US stock. There's Euro bond to help you take care of that depreciation. So that's why I had to expand the scope of this dollar investment by sharing other opportunities beyond stock, even though we're going to talk about stock, but just to let you see how that you can also invest in other dollar opportunities. Then we have the US Treasury bond. You can also invest in US Treasury bond. Yes, US Treasury bond is just like your normal FGM bond. The way you invest in FGS savings bond, you can invest in US Treasury bond. US is the highest debtor. They hold the highest debt in the world. Like I always tell some of my colleagues, I tell them that any government that can print its own money shouldn't default. So you can do this. So you might and then ask, what's the return on US Treasury bond? The return on US Treasury bond is tied to the interest rate in US economy. The interest rate in US economy is around 5%. Now, if you look at it, you will say, is 5% not small? Then let me shock you with something. Do you know that 5% return in dollars is actually better than 15% return in Naira? If I invest in US Treasury bond that's giving me 5% return every year, and you invest in FGM bond that's giving you 15% return. So let's go back to 2020. Let me not even use 5%. Let me work with like 2%. So if I invest in US Treasury bond in 2020 and it's giving me an average of 3% per annum, and you at the same time you invest in federal government bond, savings bond, maybe 15%, 20%, let's even use 20% every year. You can't compare my return and your return after 3 years. Number one, it still takes us back to depreciation. You will see that with this massive increase, my portfolio would have increased by 150%. So this currency devaluation of a thing, it's actually key. It's something you shouldn't ignore. It's something that should help make you uncomfortable because you don't have a USD asset. You can't sit down and complain that dollar to naira is rising every year and then you're not doing something about it. You're not trying to hedge, like they say, one leg here, one leg here. So you must have your two legs, at least one leg in Nigerian market, one leg in US market, so that if this one is not standing well, this one will help you stabilize, and then the other way around too. Knowing fully well that in the long run, the last how many years, you can see what has been happening. Now the question is this increase going to stop? No. I've had meeting multiple times with members of my community at different points in time where exchange rate was 350, 400, and I keep telling them. And some people will think, are you trying to tell me that Nigeria would? I said, the truth is that we have not gotten it right when it comes to stabilizing our exchange rates. The government is here to recognize the power of demand and supply. Until the government addresses the supply side of the markets, then exchange rate will keep rising. Stop fighting demand. And that was where I actually found Emefiele very, very disgusting. I'm sorry to say, because he was fighting demand, restricting people from accessing dollars, coming up with policies where you should be looking for a way to encourage supply. You can't fight demand. There is no government of any economy that can fight demand and supply. Any government of any economy that tries to fight demand and supply is already gone. I don't even know how to use it. So you can't afford to leave your assets in Naira only. It's a must. We would have shown you. Imagine that you have invested in dollar or you've bought dollar in January. Look at the exchange between January and now from this chart. January 2023, you can see here from 400 and something, I had the E-window. Look at the huge run up. And then you would think that, oh, is it going to end here? No. Now, funny enough, some people will say the dollar is already high. It will come down. It will come down. That come down you're talking about is just a short-term pullback. So many of us, when we see that short-term pullback, we quickly buy dollar. Now, why are we buying dollar? Some of us buy dollar because we have dollar bills to pay. For example, you pay for maintaining of your website, we pay to maintain subscriptions, we pay to. So when we see this short-term pullback, we quickly buy dollar because we know the long-term trend is still up. So that's Eurobond and then US Treasury bill. Then you also have real estate investment trusts as another dollar opportunities. You can actually invest in US real estate. There are opportunities in US real estate market you can invest in if you don't want to go the stock way. And in the market, every real estate company is actually, I think they are mandated to pay 90% of their rental income as dividend. That's a law. 90% of your rental income, you pay them out as dividend. So if you're looking for a dollar opportunity where you can invest in real estate companies in the US, you can try this out. There are so many real estate investment trusts in the US. And the advantage is that you don't even have to partake in managing the properties. You're an investor. During COVID, that was when I knew that not all real estate investment trusts are the same during COVID. So COVID actually divided real estate investment trusts into multiple sections. Now, when government declared, announced lockdown, you notice that a lot of stores were closed. So if you run a real estate investment trust, or if you invest in a real estate investment trust with tenants that are actually exposed to retail shopping, shopping mall, banking, warehouse, especially warehouse that are not focused on essential products, many of them lost money. Many of them are still trying to recover because they couldn't renew, many of the tenants couldn't renew their rents. Some are even trying to recover up to now. But if you invested in real estate investment trusts that are exposed to medical sectors like senior care, hospitals, then this ones, or essential commodities like supermarkets, then this one's actually made more money. So you will see that not all real estate investment trusts are the same. So I would rather you focus on the ones that are defensive. So when you're investing in real estate investment trusts, focus on real estate investment trusts that are targeted at healthcare sector. It was after COVID that I noticed that, oh, you don't just say real estate and then jump into, know the type of tenants that those companies, you will find out on their website, you find out on their brochure or prospectus. So I prefer you focus on healthcare. There are real estate companies that are specific, that are focused on healthcare sectors, healthcare, hospitals. Most of their clients are healthcare because of the stability and the defensive nature, meaning that no matter what happened, these ones will still continue to move on. This one will continue to, because these are sectors that generate constant cash flow. So if you want to invest in real estate investment trust, take your time to understand the type of tenants that the companies, so that would help you. So you don't invest in the real estate investment trust that at the end of the day, they will announce that their rental income has been reducing. So you need to focus on sectors that have history of stable rental income. If I invest in real estate investment trust that their customer, most of their customers or clients are hospitals, maybe they specialize in building facilities for hospitals and then they pay them, that one is stable. So I think you need, so the first three, I'll take my time to explain the first three, because if you still want to, if you want to diversify, it's not a must that it has to be stock. There are also moderate risk and moderate return opportunities. But mind you, the focus is to ensure that you hedge your assets. And then if Naira continues to depreciate against the dollar, you would know that at least that would help to increase the value of your portfolio. Then the fourth one is stocks and ETF, which is actually the focus, which is actually the essence of this webinar, stocks and ETF. The same way we've been investing in Nigerian stocks. So here we're looking at the US stock market. We're looking at US stocks ETF. So you have four options. So if you chose to go the stock way, you can do all. You can also build a balanced portfolio in the US market. So when people are saying US stock market is risky, you need to understand the approach. So if you want to build a balanced portfolio, you could say, okay, let me try Euro bonds. Depending on my age, when you talk about risk profile and risk tolerance, you can't exempt your age when you're discussing risk profile. Age is the number one thing to look at. For someone that's probably below 50s, in 40s, 30s, balance, you can still be a little bit aggressive. But once you are late 40s, 50s into 60s, then you should be looking at income, stability, low risk, stable income. Then maybe more in Euro bonds, more in US Treasury, and then real estate, and then a little bit of stock. So for some of us that want to still invest in stock, so let's now break it down into some additional section. Now, if you want to trade the US stocks, there are three ways to invest in US stock markets. And then you can pick the model that fits your risk profile, tolerance, and then match your preference. Why am I taking my time to break this down? I'm taking my time to break this down for some of us that are just attending my webinar for the first time in US stock. So I didn't just go direct to say, oh, buy this, buy this. I wanted to understand how you should approach US stock, and the best way. The certain decision need to be made. You don't just jump into the US market and say, I want to start trading stock. So first, you can start by investing in ETF for beginners. ETFs are assets that track the value. We call it exchange traded funds. These ones, I don't have money to buy all the stocks in S&P 500. S&P 500 is the top 500 company in the US market. I don't have money to buy all the companies, but I can buy ETF that tracks the performance. So ETF tracks the performance of an asset beyond just the stock. You can also take into commodities. Oh, I want to buy gold, but I don't have the money to buy physical gold. You can actually buy ETF that tracks the price of gold, meaning that as gold price increases, your ETF also mimic that performance. Oh, I want to buy oil. Can I also buy ETF that tracks the price of oil? Yes, I don't have money to buy to build my own oil company. I don't have money to build my own oil facility or to buy in barrel. You can leverage ETF. So this is one area that Nigerian stock exchange needs to work on. So that if the market is going down, there will be other assets you can take advantage of. Not like when the market is going down, everybody is quiet. Because what? There's nothing to buy, or our money just sitting down, lying idle as cash balance. If NGS had actually come up with ETF, really well diversified ETF, oil ETF, commodities ETF, currency ETF, gold ETF, even sector-based ETF, telecom ETF, you will see that even though the overall market is going down, you can still use ETF to leverage on other opportunities. Like look at oil price. Oil price has been picking up steadily in the last 3 weeks to 4 weeks because of this production cuts. So for us, if there was an ETF in the Nigerian stock market, we would have probably started buying into oil ETFs. So that's why the US market seems to be so diversified. One thing I love about US stock market is that no matter the direction of the market, even if the overall market is tanking, there will always be certain stocks that are doing well. There will always be certain sector. Even if you don't find any stock, there's an ETF. There are ETFs you can leverage on. Even throughout 2022, when US Fed was increasing interest rate and the market was going down, we are actually ETF that was doing well. And in the US market, there's something we call inverse ETF. Inverse ETF are ETF that goes up when the overall market is coming down. And then when the overall market is going up, they will come down. So even when the market is crashing, we call them inverse ETF. You can even buy those inverse ETFs. So we need that if you think that the market is going to crash, there are ETFs you can buy to bet on that crash. Now imagine that we're anticipating or expecting the Nigerian stock market to crash. There would have been an inverse ETF that you can quickly buy. So these ones they go up when the Nigerian stock market index is coming down. If there was now even the currency ETF, if there was a currency ETF in the Nigerian stock market, as dollar is appreciating, if you cannot buy dollar directly, you can actually gain exposure to this currency exchange rates by buying their ETF. So ETF is one instrument the regulator need to work on to help at least diversify so that it will attract more investors and increase participation beyond just the stock market going up only because people make money when the market goes up. What happens when the market comes down? We have to stay. We don't have any choice. So the next option is mutual funds. Mutual funds. I don't have the time to monitor my stock. Okay, can I give it to professionals who are good at monitoring the market, who have a good track record? Then you try out equities mutual funds. So these mutual funds, they are professionals, recognized, regulated, and registered. So when they mobilize funds from investors, then they will leverage their in-house expertise, tools, and resources to find opportunities in different sectors. Even in Nigeria, we have them too. We have equity mutual funds. So in the US too, we have equity mutual funds. So ETF and mutual fund works more if you don't have the time. But I will tell you the strategy that makes more sense if you want to use both options. Now, the last one is US stocks itself, buying the company directly yourself. Oh, I don't want to go the ETF way or mutual fund. Can I do the analysis and choose the stock I want to buy? Yes. So there is US stock itself where you say, okay, I think Apple is going to do well. Let me buy Apple directly. So this one you're buying into the companies. I want to buy Microsoft because of the AI trends. Or I want to buy Nvidia. I want to buy Google. I want to buy into Caterpillar, whatever companies you want to buy. So this one you're buying directly. So we have ETF, we have mutual funds, and then US stock itself. So let's look at each of them. Now, ETF, like I said before, it tracks the asset value. You're looking at the asset value Whichever, depending on the kind of ETF you want to buy. Now, a good way to look at ETF is that they actually react more to trend and they are sensitive to US Fed interest rates. Let me explain that. There are different ETFs in the market. We have the indices, which is the SPS ETF that tracks maybe S&P 500, and then every other indices in the market. You have the industry or sector ETF. You can buy banking ETF, oil and gas ETF, material ETF, telecom ETF, semiconductor ETF. One thing I like about ETF in the US stock market is that you can find ETF that are specific. You can even find ETF that are focused on buying AI stocks only. And more ETFs are coming up. You can buy AI focused ETF. Since you believe that AI is the trend, then you can buy AI ETFs. You can buy cloud ETF. After COVID, during COVID, most of the ETF that tracks cloud softwares, cloud applications like Zoom, Microsoft, they went high because the demand for cloud was high. So you can buy cloud ETF. You can buy gaming ETF. There's gaming ETF, there's transport ETF, there's shipping ETF. So one thing about this kind of ETF is that they react to trend. And the best way to buy into ETF is to look at sector. Look at sector that is benefiting from that current trend. For instance, when US Fed was increasing interest, when they started increasing interest rates, I think early 2020 into 2021 and 2022, what happened? Most stocks were tanking. Now, if you go by sector ETF, we're looking at what are the sectors that are benefiting. You will notice that fixed income, US Fed, US Treasury, a lot of people were actually moving money into Treasury because of attractive interest rates. So if you also look at other sectors, so they were inverse ETFs. They did extremely well. Inverse ETFs are ETFs that rally higher when the overall market is coming down. So if you play by sector, you would most likely find ETF that is benefiting. That's the good thing about US market. It's the biggest. There are over 8,000 stocks. Imagine. And more are still being listed every day. And most of the stocks on the US market, they are actually stocks from different countries. They represent almost all the countries. So that's why US market is so diversified. Guess what? There is also China-focused ETF that are focused on country. If you want to gain exposure to China, Chinese economy, you don't necessarily need to go to China. There are ETF that tracks the performance of Chinese economy in the market. Brazil, even emerging markets where Nigeria belongs, you can find ETF. So you see how diversified that market is. So big. It's so big. You just look for what works for you. If you're not careful, you will just be confused because you wouldn't even know where to start from. But I'm not doing that to explain the value that ETFs offers. Oil is rallying higher. What are we doing now? You can go buy sector ETF, like oil sectors ETF. So if I go online to search oil ETFs, you can see here, like this USO, Vanguard Energy Index Fund. You can see here. So crude oil ETF lists. So crude oil ETF list will give you a list of ETFs that tracks. You can see here, like I told you, USO, UCO. These are ETFs that are focused on oil. So I want to buy oil. Must I buy a barrel of oil? No, I can gain exposure by buying into some of these ETF right here. So I'm actually exposed to energy. Even renewable energy like solar, there are also ETF. So I'm just explaining the vast opportunities in the market. So if you're limited to the Nigerian stock market, you might actually be changing yourself somehow. So even if an exposure of 5 to 10%, it's okay. It mustn't be everything. You can say, okay, let me try 5 to 10%. Okay, I don't want to buy into stock. Let me see if I can move into ETF. ETF, you don't need to do any analysis. The only thing you need to do on ETF is understand what is happening in the economy and follow the trend. So ETF more is you will do well when you invest in ETF by understanding sector trend. So that's why I have to use sector selection. That's the best way. If you don't know what is happening in the economy, if you don't know what is happening in the global financial markets, if you don't know what is happening in the global economy, you may not necessarily know the best ETF to buy. ETF is not something you just gamble. But there's one ETF that actually performed well in the long run, and that's ETF that tracks the performance of the US markets. ETF that tracks the performance of the US market, SPS. That ETF has been doing extremely well. So if I type SPS, look at it here. Some people will say, are you telling me that stock will not crash? See, look at since 19, as far back as I can remember, you can see how the stock market had been on a long-term uptrend. Now, at some point, there will be pullback. It's normal. There will be pullback. Now, let me tell you why the US market, why stock market will continue to maintain a long-term uptrend no matter what happens. Let me share the reason. Number one reason is that the stock market is made up of companies. That's number one. Now, each of these companies, they actually provide employment. They provide jobs. And the basis of an economy is job, availability of job. If there's no job in an economy, it's a problem. And the government would not allow companies to go down because they know the effect. It's only in Nigeria that government will be insensitive when there's an announcement from a company like GSK that want to leave. It's only in the US, such can happen because they know the number of people that will lose their job. So the government will immediately swing into action. So if these are companies that makes up the stock market, and you know the impact, the social impact, the fact that they provide employment opportunities, and these companies sells products, then the government will do everything possible to make sure that they are actually standing. Another part, population is growing. As what population is growing, there will always be more demand for goods and services. So US stock market will always be on the long. Yes, at some point there will be pullback, there will be pullback, there will be pullback. But after the pullback, what happened? The market continues its long-term uptrend. So SPS ETF or Vanguard ETF, the one that tracks the performance of US stock market, has always been preferable. A lot of people use that. You don't even need to monitor anything. Just buy them and keep in the next 5 to 10 years. And from analysis, and if you hold Vanguard ETF for at least 10 to 20 years, there's at least 90% chance that you make money. At least 10 years. The longer you hold them, the higher the chance that you would most likely make money. So it's not an ETF you will buy today and then think that you want to sell tomorrow. So that is ETF. Then for mutual funds, these ones are managed by experts. They are managed by experts. They're managed by professionals. You select. So if you want to select this kind of ETF, you follow track records. I want to look for ETF that have at least history of positive results. And then ETF, the mutual fund must have been in existence for at least 10 years. You don't want to buy into a mutual fund that is just coming up. There are many mutual funds in the US that have been there for a long time. You can see that you have the Vanguard ETF, Fidelity ETF, you have the BlackRock, you have the Schwab, there are a lot of them. Then you can even say, okay, let me even focus on mutual funds. I mean, mutual fund that pays dividend. So there are also dividend mutual funds. They focus on dividend paying stocks. Then at the end of the year, they will distribute this dividend to their shareholders. So there are different mutual funds. There are also oil mutual funds. There are mutual funds by sector. These ones are focused on oil and gas, energy, banking. But I would rather you go with mutual funds with at least they have a track record. So we've talked about ETF and then mutual fund. These are different ways you can play in the US stock market. So when we say US stock market, it's not necessary that they have to be buying individual stocks. You can play by ETF. You can also play by investing in mutual funds. Then stocks. We are moving bit by bit into the core part of this webinar. Now, stocks. This one is self-managed. Nobody is managing your stock for you. Nobody is managing your portfolio. You own them. It's your own. All you need to do is to open a brokerage account. I have 3 brokerage accounts that I recommended already. I'll discuss that. And then you're expected to pick select companies, watch the trend. But most importantly, which is where my strategy is right now in the US markets, I focus on turnaround stocks. I've had good success in turnaround stocks more than any other stocks. Turnaround stocks are stocks that were beaten down and are picking up gradually. That's the definition of turnaround stocks. They've suffered and now picking up gradually. These are the kind of stocks I buy in the US markets. These are the kind of stocks I buy in the US markets. So here I'm going to now talk about how I trade stocks. What I do, I focus on turnaround stocks. Before you start trading US stock, number one, you must open a brokerage account. Open a brokerage account is standard. And again, I don't know why many of us have been battling with a brokerage account for the past 3 months in Nigerian market. So if you've been having issues to open a brokerage account in Nigerian market, I don't know if US market will be easier for you. But I think US market should be a lot easier because most times I notice that our Nigerian brokerage firms, they need to improve on their platform. It's not like that in the US markets. There are so many flexibilities in US market that I still wish we have in Nigerian stock market. So here, why turnaround stocks make the most money? So let me share what I do to trade US stock. Let me share what I do. Now, I'm looking for stocks that are emerging from the bottom. Now, what are the kind of stocks? There are different strategies to trade US stocks. There are different strategies to trade US stocks. You're talking about selecting from 10,000. In Nigerian market, you can sit down and scan through 100 stocks, please, 1 to 2 days. But how long will it take you to scan 10,000 stocks in the US market? And again, you will find screeners. There are so many screeners in the market. I still use TradingView to select the stocks I want to buy. That's why I chose the highest plan on TradingView. So it will give me that flexibility to expand my search and then leverage on their tools to make my analysis and search easier. So one, I'm looking for stocks that are emerging from the bottom, stocks that are down. These ones have been beaten down, would move to the chart proper. They've been beaten down, they've suffered, and now they are picking up. The reason they are picking up could be number one, there's a breaking news. There's a breaking news. There's this company in the US market that met my criteria. This stock has suffered for a long time. And then suddenly there was an announcement that these guys are going to be involved in flying aircraft, taxi aircraft. Think electric taxi, yes. And suddenly their stock started breaking after staying within range for almost 6 months to 1 year. And then I bought the stock and then I sold for 20 to 30% and I'm out of the market. So I bought them at the bottom of the market. Why? Because my downside risks are limited. He that is down fears no fall. He's already down. I don't want to look for stocks that is already up. I want to buy stocks that are down. So this has always been my standard, even in the Nigerian markets. Many of us that followed my analysis and strategy and webinar, you will see that I only look for stocks that are down and then have potential at the bottom to pick up, which is bouncing ball. Now, these stocks are just broken out. All this analysis that I just shared now, you will see each of them on charts and how they work. Now, these ones are just broken out. That means for the past 5, 6 to 12 months, they've been idle at the bottom of the market. They've not been doing anything. In short, they are out of favor. They are out of favor. Nobody's buying them. They are dull. And then suddenly they picked up. Why did they pick up? With breaking news. They picked up on breaking news. They picked up on earnings announcements. They picked up on interesting products. But I'm not buying them to hold them for a long time. I bought them to sell. This class is strictly for trading, not investing. So for some of us that might ask me, are we also going to invest in US? This is for trading. For me, I would rather you invest in the options that I've shared with you. The first three options, Euro bond, and then trade US stock. But if you want to buy into dividend paying stock in the US market, sure you can do that. But I think I'm better off investing in all these assets like Euro bond, true US treasury, and trading. I make more money trading than investing because the dividend yield from US stock market is very small, except some few stocks that I've heard for a long time. I think they are more in the shipping line. Then here you are buying into a new trend, and then I said I've recorded impressive gain in the last 90 days. So let me discuss how this works before we then go back to the strategy proper. So let me show you one of the companies here. Now, I've sold this stock already, so I'm not showing them again, but I want to show something. Now, Eka Aviation is a public traded headquartered in this blah blah blah. So here it's eVTOL aircraft are planned to transport people in and around cities in an air taxi service and are claimed to have a range of up to 100 miles. You can see what the company is into. And then in the last 6 months, this stock is already up by 117%. 117%. Okay, so let's look at this stock on charts. Let me explain what I mean by buying a stock that is already at the bottom of the market. So if we look at this stock, look at a perfect example. Look at how this stock has been beaten down. From 2021, this stock was selling for 17 US dollar. Then look at how this stock has crashed. I like to buy stock at the bottom. This is my standard. Whether it's Nigerian market, US market, I want to go in at the bottom. I'm looking for gold on the ground. So this is how this stock has been beaten down right here. Now, I'm using this to explain something. Now, after this stock had been beaten down, something happened. And that leads us to the 4 stages, which you must always follow if you want to trade turnaround stocks, like I'm doing right now. There are 4 stages in the life cycle of a company. Now, this may not apply to all the stocks in the market, but I'm only focused on the only stock, the one stocks or the one stock type that are meeting this particular, that have made this particular strategy. And this is it here. Now, there are 4 stages, and I'm going to pick each of the 4 stages on this particular chart. There are 4 stages when it comes to trading stock. First one is what we call the accumulation stage. What's the accumulation stage? This is where a stock is trading within a range for a short time. This period, there is no activity. In short, we say the stock is dead at that point. A lot of Nigerian stocks are trading at the bottom of the market. Nothing is happening. So I'm looking for stocks that have been down. Nothing is happening at the bottom. The stock is down. It's not going up. It's not coming down. It's trading within range. It's trading within tight range. Look at ACR. Between January 2022 to May 2023. Let me expand this on my daily charts. You can see here, between January 2022, right here, this stock had an established support. Now, at some point, it broke down in September. Now, from September last year up to May, you can see that the stock was not really going up or down. It was trading between range. You can see it dropped from $2 down to 1.6, went back to $2, traded within that range, then pulled back again to 1.6, 1.7, then went back. So this is what we call the period of accumulation. Accumulation means it's trading within time range. Now, why do we call it accumulation? This is where mutual funds, this is where institutional investors are actually buying this stock. Let me tell you why they are actually buying this stock at this point. Just follow this pattern that I'm going to share you. Why I'm taking my time to share this strategy is that I want us to appreciate the stock I'll be dropping on a monthly basis. And every stock we meet, we follow this pattern. Let me tell you why. What actually drives a stock to the downside? What takes a stock to the downside, or what makes a stock to fall? When there are more supply than demand, right? That's one. When there are more supply means people are selling the stock and nobody wants to buy, or only few buyers are in the market. Then sellers are willing to drop the price to make it attractive, and then price will be going down. Now, the moment the stock gets to a point, this particular point right here, where the volume of buyers available is able to absorb. Let's say this stock, someone wants to sell 1 million units of this stock. And then who wants to buy? The buyers available only want to pick up like 10,000 units. 1 million and 10,000 units, there's a huge difference. What happened? The sellers will be willing to bring down price so that people can step in to buy. At that point, price is crashing. Now, the stock will get to a point where the amount or the quantity available for sale and also the quantity available for purchases will automatically match themselves. That means you will get to a point where the price has crashed and someone will be able to mop up all the units available in the market. And then if anybody comes to sell that stock again, the person will mop up again. At that point, we call it point of equilibrium. What does that mean? It means that demand and supply are now the same. So the point where demand and supply are the same in the market, that's what we call accumulation. That's a sign that there's one heavy buyer in the market. If you know how to dictate institutional volume in the market, you would not miss it in this, you will never miss opportunity again. Institutional volume steps in when they are able to stabilize price. Look at this stock. This stock was supposed to be crashing even below 1.2. So what happened? Why the price bounced off from here is because there was a volume that was able to accommodate or swallow all the supply in the market. That was why the price stabilized. Then another seller came in again, the price was able to. So this particular accumulation is what I call inactivity, where there's nothing happening. The stock is trading within a range for a short time due to inactivity. Inactivity means that the prices is not going up or coming down, but someone is mopping up the units because the stock was coming down from a sell-off. So the point where the sell-off was paused because there is available volume to mop up all the selling offers. That is what we call accumulation. That means someone had actually stepped in. That's a sign that there's a buyer in the market. That's a sign. Now, the moment the stock stays within the accumulation range, I like to check accumulation rate for at least 5 to 6 months. The next thing that will happen is that all the units of that stock available for sale have already been mopped up. Then the stock will become scarce. Nobody is selling again. Now, at that point when nobody is selling again, that's where the price will start picking up because the buying unit in the market has now exceeded the selling volume. And then you see the price start rallying higher. Now, at that point where it start rallying higher, first, there's going to be a breakout from a key level. So this point that I've marked here is what we call the breakout. So after accumulation, what happened? Breakout. Why did the breakout happen? Because the selling volume in the market is now limited. Now we now have more buyers that are stepping in. Now, as more buyers step in, the price will start going up. So if you go back to the slide, the next part is what? Breakout and advance. So breakout and advance, I will show you different stocks that have shown this sign, not only ACHR. So it will look like I only pick one stock. So this breakout, and then the stock has started advancing. Now, the best time to buy a stock is when it's in an advanced stage. Is when the stock is in its advanced stage, meaning that it has passed through sell-off, it has passed through accumulation, and now is actually in its advanced stage. That's the best time to buy that stock. So this advanced stage is where I am looking for opportunities in the market. So every stock I've been trading, I've always been in this advanced stage. Why? Because I am moving in line with the trend. The trend is saying this stock is going to rally higher because it's moving to advanced stage. So the probability that you're going to buy into a stock that will be in an uptrend is high because you are buying stocks that are in the advanced stage. The mistake a lot of people make in the past has been that they just buy into a stock without understanding the stage that that stock is in the market. Now, what happens after advanced stage? Once a stock has advanced to an extent, it gets to a point where it will now become overbought. Overbought stage. The stock rises to a peak level where it's considered overbought. Now, this overbought stage is where people will jumping over themselves. Oh, I want to buy because the price has, maybe that's what they will hear on media. Nvidia has delivered 100% in the last 6 months. They'll start rushing to buy, not knowing that the stock is already at overbought stage. That overbought stage, we call it distribution. At that distribution stage, nothing is happening. The smart ones are already taking profits. Then it will get to a point where nobody is buying again. The stock is now considered expensive. Then we'll now have more volume. And what happened? Decline takes in again. So that decline stage is where this decline stage. So you can see how stocks go through 4 stages. First one, it declines. It gets to an extent where the stock is considered cheap. Then an institutional investor will step in to mop up the stock because they feel it's cheap. Then when all the volume available for sale has been mopped up, price will stabilize because nobody is selling again. And then at some point, demand will start exceeding supply. Price will start picking up again. So it has moved from accumulation into advanced stage. And then that advanced stage is the best time to buy the stock. Once start advancing, then that's where I quickly key into that stock. Then when I key into that stock, I'm looking for at least 15-20%. I've recorded more success. Now, I'm not saying this strategy is foolproof. There are some stocks you will buy at advanced stage and they will crash. And one of the reasons I've discovered for that crash is if the company releases results that is less than expected, that does not meet up to expectation. That's why I said earlier that if you want to buy a stock that is in its advanced stage, avoid companies that are about to release their financial year results. But if the company has released its results, better, you'll be able to tell. But if the company is about to release, don't buy because that is a risk facing you. That's a huge risk facing you. It's not about that. So let's pick some of the stocks. Like I told you, accumulation, breakout, overbought, and decline. Where is the best place to buy the stock? Breakout and advance. So if a stock is in accumulation, I don't buy. If a stock is overbought, I don't buy. If a stock is in a decline stage, I don't buy. But if a stock is in breakout or advanced stage, this is where I buy the stock. So let's look at some of the stocks right here. I've discussed HCHR. Now, I want to quickly jump into the first stock that I want us to get. The first stock that I want us to get. All the stocks you see here, they are not a stock to buy. Please don't buy them. I'll tell you the ones to buy now. Then going forward, for people that want to join the community, then we'll then be able to look at more. But in this webinar, one of the things I like to do in my webinar is I like to give out free stock. At least get the value first, see the impact. So one of the stocks that I'm buying that I bought on Thursday and Friday, and I think it's still within the buy range, and I will show you how this stock meets my checklist, is AUR. Let's look at the base of AUR. AUR is one company that is actually working on driverless truck. In the US, they were talking about the scarcity of drivers, truck drivers. So look at AUR. AUR is a self-driving vehicle technology company based in Pittsburgh. Look at it here. AUR has developed the Aurora Driver, a computer system that can be integrated into cars for autonomous driving. Now, these guys, let me open something and show you. These guys are trying to develop a driverless truck. A driverless truck, and they've seen some success, and very soon. Now, but that's not the focus yet. Let's look at the stock, how the stock had moved from decline stage. Look at it here. This is at some point the stock was trading as high as $16. Now, this is decline stage on AUR. AUR declined, and then you can see here how it declined. AUR got to an extent where you can see it got into accumulation. This accumulation. Accumulation is when the stock starts trading within range. No up, no down. And then you can see the period the stock broke out. You can see the period the stock broke out from 2 Naira. It broke out from 2 Naira to touch a high of 3 Naira and then pulls back. So right now, AUR is in the buy zone for me. AUR is trending higher. Why? Because the stock is already in an uptrend. First, this is the decline stage. Second, this is the accumulation stage. Accumulation stage, nothing is happening. It's trading within range. And third, it's what? Advanced stage. So it's the advanced stage that presents buy interest, buy opportunity, I mean. So the stock broke into advanced stage in June, last 2 months, then rallied higher, pullback. So in advanced stage, every pullback is a buy opportunity. Pullbacks are buy opportunity. But one of the caveats is that I do not want to buy the stock when it's about to release its financial year results. So what I do is I will quickly go to investing.com. What am I doing in investing.com? I want to see when the company will release its financial year, its next quarterly results. Then I'll come here, look at AUR. AUR next earnings date is November. So I'm going to buy the stock right now because of what? November. So I'm going to hold the stock for my return to come in, not as if I'm going to hold them till November, but at least I don't have a risk facing me. That risk is the risk of releasing its financial year result. I don't get too comfortable on the stock thinking that it would, even if analysts are projecting, they're just projection. So many companies are disappointed. So the only way to reduce my risk in the market is to ensure that I'm not buying a stock that is yet to release its financial year results, at least in the next 5 days. So I look at the earnings date, November. We are in August. So I still have September, October, like 2 months plus to trade the company stock. So you see that this is a stock that is already on its uptrend. And one breaking news on this company is that if it becomes successful in a driverless truck, then this company would most likely do extremely well. But I'm not focused on that. I'm not investing for a long time. I'm only taking advantage of the fact that the company just broke out into its advanced stage. Decline, accumulation, advance, and then distribution where you have the sell-off. So let's look at other stock. RMP. RMP is not a buy. The only stock that is a buy right now is AUR. So let's look at other stock. I'm looking at other stock to just explain to you how understanding the first stages in a stock life cycle is very important. Look at RMP. You can see from a dip, you can see here, it got into accumulation stage. This is accumulation stage right here. Accumulation is when the stock starts trading within range. And then you can see what happened here. Look at the breakouts. On 10th of August, the stock did 18% on a single day. Why? Because it delivered an impressive result. So this is live RAM. You can see here, 4 days ago, Q1 earnings and revenue top estimates. So the best time to buy a stock is not before its earnings, it's after its earnings. But RMP have not met my criteria yet. Know why I said so? When a stock breaks out into advanced stage, it will most likely pull back. So is that pullback that I'm waiting for? Just like we had on AUR. So every stock that I have right here are stocks that had gone through each of the 4 stages, but I'm only waiting for them to present a buy opportunity. Look at NEOHG, sorry. You can see this is the decline stage, and then at some point, it got into accumulation. Accumulation is where this selling pressure has been paused, because if there was no buyer, this stock wouldn't have recovered from here. So that buying volume that is able to curtail the sell-off, that tells me that there is already an institutional investor, institutional volume stepping in. So when a stock is in accumulation stage, that's a sign that institutional accumulation is taking place. When I say institutional accumulation, I'm talking about buyers, institutional volume, banks, insurance company, mutual funds. Because from their valuation, they feel that the stock is cheap, and then they're mopping up. And then you most likely buy them during breakouts. Now, you can see where we had the breakouts. So what happened? Once it breaks out, it pulls back. So it's when we have a confirmation the stock is rallying higher. But I don't have confirmation on NEOG yet. So it's the one that I have confirmation that I mop in. So I don't just quickly buy them because it just broke out. If you buy them because it just broke out, you most likely be taking risk because there's also room for pullback. So it's when they pull back, that is where I buy those stocks. Then you have OPK. Same thing. You see here, look at decline, and then this is accumulation. Can you see right here? We had a breakout. You can see here how the stock broke out. Now it's put. So when the stock breaks out of accumulation, it will most likely pull back to its previous resistance, on support. Then it's from this stage that I'm waiting for confirmation that this stock will continue to rally higher. So once I see a sign that the stock is going to rally higher, then that's where I will now buy, meaning that the stock is now in a confirmed uptrend. So the stage I want to buy the stock is when it's in a confirmed uptrend. The stage I want to buy a stock is when it's in a confirmed uptrend. That's the stage I want to buy a stock. So SWK, look at this stock again. Can you see? After a massive, so the stock must go through a major sell-off. If it doesn't go through a major sell-off, I'm not buying because I want to buy them from the bottom. When you buy them from the bottom, you reduce your chance because your chance of losing because your downside risk is low. The stock is just emerging. Look at this is a clear accumulation. You can see here, clear accumulation right here, starting from July 2022. That's almost a year after a long sell-off that started from January 2022. This is a perfect example. You can see here, this distribution. A stock had rallied so high, and then it got to a point where it's oversold. The next thing, after oversold, decline stage. Once it completes the decline stage, it goes back into accumulation. What makes a stock goes into accumulation is when there is volume, when there are buyers volume. Because if there's no buyers volume right here, the stock should have been going down. So what helped this stock to stabilize is because some people have stepped in to start mopping up, and that's the sign. That's the step of institutional investors. So this is a sign that institutional investors have already moved into the company stock. So what I'm waiting for now is seeing the breakout, pullback, then I'm waiting for confirmation that the trend is going up. That means we are now in a confirmed uptrend, which is the advanced stage. And the best time to buy the stock is when it's in advanced stage. One interesting stock, again, is SoFi. SoFi Technology. Look at this company here. You can see this company, notice this part, decline, then move into accumulation. Look at how this company has been under accumulation since April 2022. Accumulation means the stock is trading within range between $8 to $4. You can see how it's trading within range. Can you see here? Can you see here? Can you see there? Suddenly, what happened? It broke out. After it broke out, it pulls back. Now, this is the confirmation that I always look for. Now, you can see here, from here, it moved from 8 to 11. Take profits. It's not compulsory that you must hold them for a long time. Once you see a confirmation that the stock is recovering from a pullback, start breakout of a long-term accumulation, buy, and then take profits. That's how I traded this stock. It will pull back, but overall, the stock is trading higher. Now, when I say trading higher, it doesn't mean US stock market is not a market where you expect, it's not a market for the faint-hearted. That's the truth. But overall, this stock is actually in an advanced stage. But advanced stage does not mean that it will go up in a straight line. There will always be pullback. But overall, it's already in an advanced stage. So what are we expecting? Uptrend very soon. And so far, they released impressive results. These guys, they're actually in student loan space. So after that COVID, there was a pause in student loan repayments. So it affected the stock. That's what actually affected that dip. Then at some point, it diversified into other revenue line. So when they released their recent financials, we got to see that the majority of the growth in their income was not driven by student loan. Even though they started as student loan company, it was driven more by other segments. Now, very soon, there's a there's already a news that there will be a resumption in student loan repayments, which will be bullish for SoFi. So that confirms the uptrend on this particular stock. But doesn't mean I'm going to hold them through that period. My own is to buy them when I see pullback after accumulation and then ride them, sell off, and I'm out. US market is not a market where you want to stay for a long time. It's not like Nigerian markets. The market is very volatile. So you must have a standard strategy that is able to help you pick stocks that have at least higher chance of going up. So we have NCNO as another stock. There are so many stocks that I've picked. So many of them that I've picked. So what I do is I just wait for the ones that have confirmed reversal. Look at NCNO. You can see the sell-off right here. Now, the stock got into, look at the accumulation period. Now, we have a fake breakout back again. Now, you can see at some point where the stock eventually broke out higher, we are seeing a pullback. But there's no confirmation of uptrend. So I don't jump into the stock when it pulls back. I buy them when I see confirmation that the stock is actually resuming its uptrend. That means it's actually starting a new stage, and that new stage is uptrend. That new stage is uptrend. So the final one is BOH. BOH is Bank of Hawaii. Now, look at Bank of Hawaii right now. From sell-off into accumulation right here, and then final we got a breakout. Now I can drill down to my lower time frame, 4 hours. You can see where it's clearer right now. You see, this is accumulation right here. Then it broke out, pull back. Now check how this stock is running higher. So this is the second stock that I'm holding up right now. BOH and AUR are the two stocks I am buying. BOH and AUR are this because they are actually in a confirmed uptrend after breaking out from accumulation. After breaking out from accumulation, there are two stocks. So I don't just jump into all the stocks because it just pull back. I want to see a confirmed uptrend. First one is AUR. You can see pull back, then you can see how it's running higher again. So it's a confirmed uptrend. And that's the stage I want to buy the stock. Because when a stock breaks out from accumulation, what happened? It's supposed to go into breakout an advanced stage. And this is the best time to buy the stock. It's at this stage that you most likely make your money from the stock. Not overbought, not sell off, not accumulation, breakout and advance. So you can see how the stock is in a clear advanced stage. Look at the decline stage. So now that's the clear advanced stage, I expect this company stock to rally higher. So that is how I trade US stock now. And when I'm trading this US stock, I don't go in with all my capital. At a time, at least I want to have like 30%, 40% exposure, then leave the remaining money in my cash wallet. Let me see the result of the ones I've bought. So I don't want to be buying stocks without seeing the result of the existing one. So that's why I said the model I'm going to pick right now is that I would pick stock to trade for the month based on this strategy. Okay, from my checklist, these are the stocks that have now moved into the advanced stage. These stocks traded within accumulation for this period right now is already in an advanced stage. I am buying at this price, and this is my take profits, and this is my stop loss targets. Then we watch how the stock performs for that month. So it's not like buy stock today, buy stock tomorrow. No. We pick 2, 3, 4 stocks for the month, and that's what we're going to focus on until we see results. And then there will always be new stock coming in. There are 10,000, over 8 to 10,000 stocks in the US market. So you can never lack stocks to buy if you follow the strategy that I've shared with you. Look for stocks that have that have gone through sell-off, that have been beaten down, and then went into accumulation. From then, they are back to advanced stage, and then they will rise to an extent where they become overbought. That overbought stage is where buyers have actually moved up to an extent where it's time for them to take profits. And then the next thing, it goes into decline stage. So understanding this stage that is stuck in is very critical. And guess what? I have used this strategy in Nigerian markets. The only problem I have with Nigerian stock is that selections were limited, unlike US markets. Selections were limited, unlike the US market. I can tell you 3 stocks in Nigerian market that I use this strategy to trade. 3 stocks in Nigerian market that I've used this strategy to trade. But the problem I have with Nigerian market is that we don't have much stocks as the US market. And let me tell you the stock. I'm going to mention that so they won't look like. The first stock we used to trade was Japan. Some of us that bought Japan when I recommended Japan. Look at it here. On my platform, I recommended Japan at 37 kobo. If you're a member of the community, I'm sure, please, you're here to confirm that. What happened? Let's go back. Look at decline stage. Japan was in a clear decline stage. And then it got into accumulation. Look at it here. Look at the accumulation stage on Japan. You can see the line. Between February 2022, Japan had been trading between 37 kobo and 25 kobo. Notice this. Can you see? This is inactivity. This, you can see here. Look at where Japan broke out. So on my platform, I said, go and buy Japan at 37 kobo. If you're on my platform, you will see that. And what happened? Look at how Japan moved into advanced stage. Japan moved from 37 kobo to reach almost 1 naira. So this is not a strategy that is born out of guesswork. That is why I want you to pay attention. This will help you play safe in the US markets, big time. It works in any market. And why I like it more in the US market is that we have options. In Nigerian market right now, there is no stock as it is right now. Why? Because Nigerian market is limited. You can see how Japan did extremely well. Second stock that did that, livestock. Look at livestock. Let's go back. Look at the decline stage. Can you see? Livestock went into accumulation. Can you see? From July 2022, livestock had been in accumulation. I've been watching the stock for a long time. Look at where livestock broke out into 1 naira. Can you see the advanced stage? Livestock moved from 1 naira 20 kobo in May to reach a high of 2 naira 28 kobo. Excuse me. This is how this strategy plays out. This is one of the best strategy in the stock markets. Accumulation, breakout, overbought, and decline. Many people do not know this. The few people that have spotted this, they are making consistent profits. My only challenge with the Nigerian market is that we don't have enough stock, unlike the US market. So you are joining me on this journey to be able to trade only stocks that are actually in the breakout stage. Right now, I only have 2 stocks. And I'll show you a few ones that I'm watching. So once they meet the criteria, immediately I will alert everybody. These stocks are now in the advanced stage. They finally broke out, they pulled back, and now we're seeing the confirmation that these stocks are going to continue their trend. So immediately we buy, just like I've shared with you right now. So you can see livestock. Look at what. So imagine you knew this stage and you're able to pick livestock. And guess the In short, it was even four stocks. Another stock entered my head now. Let me, RT Briscoe. Many of us remembered when I mentioned RT Briscoe. RT Briscoe went on full beat, back to back, back to back. Many people did not get it. You can see it is decline. RT Briscoe went into accumulation. Can you see? It broke out from 35. It touched a high of 75. This strategy does not look at financial statements. This strategy is purely demand and supply. That's what drives the markets. If you want to master demand and supply, this is where you should be playing. You're looking for stocks that experience huge sell-off from the top, got to the bottom. Another buyer mopped up the stock. It stabilized price, because when supply and demand are the same thing, price will stabilize. That's the point of equilibrium. Now, the moment demand start increasing and demand start exceeding supply, price will start picking up. That's the advanced stage. So the idea is to jump on stocks that are moving into advanced stage. I've mentioned three stocks: Japo, livestock. These stocks are not buy. Don't go and buy them. I'm only showing you the results of this strategy that I just showed you that we're going to use to trade US stock. I showed you Japo. I showed you livestock. RT Briscoe, and let me mention the last one. I could go on to share many stocks. So for some of us that are following me in Nigerian stock market, I don't trade as a gambler. I follow demand and supply. I could spot demand and I could spot supply. The last stock is CWG. Here. No, this is not CWG. Yes, this is it here. Look at sell-off on CWG. Sell-off on CWG. It got to accumulation. Can you spot accumulation? Can you see? And then what happened? Advanced stage. CWG moved from 1.1 to reach a high of, in short, CWG was part of top gainers last week. You didn't know that CWG was in a clear advanced stage. There is nothing that beats buying a stock that is in an advanced stage. So when you want to buy a stock, ask yourself this question. It will save you a whole lot of money. It will save you from making mistake. Am I buying a stock that is in accumulation? Am I buying a stock that is overbought? Am I buying a stock that is... Leave overbought stock for people that are pursuing quick profits. This overbought stock here, these ones are stocks that when they announce it on media, or maybe you see on Nairametrics that stock A top gainers chart and it's doing 50% in the last 3 months, you quickly lost to. You didn't know that the stock is already in overbought stock. Break out an advanced stage. These are early, these are stocks you get in early before others. These are stocks you get in early before it catches the media's eye. So that's the kind of stock. You can see how practical I am when it comes to trading stock. And I've picked 4 stocks: livestock, RC Briscoe, Japo, and CWG. Go and do your independent verification. What each of these stocks has delivered. In short, Japo in less than a week or 2 weeks has delivered over 130, 140%. Because I spotted Japo when it broke out into an advanced stage. If you have the eye of spotting a stock that breaks into an advanced stage, you would increase. I won't say you will be making money every time, but you will increase your chance of being a profitable stock trader year on year. Now, the only problem I have with the Nigerian market is it's limited. So now, we have now moved into a market that is giving us over 8,000 stocks, 8,000 companies. So meaning that we have a lot of options right now. I just picked one, AUR. The same thing that played out, Japo, CWG, RT Briscoe, and livestock. I'm now spotting it on AUR. Look at the same strategy here. Can you see? You can see here. You can see the clear advanced stage. Clear advanced stage after sell-off accumulation. And then the other one, BOH. So that is the kind of stock we'll be trading in the US markets. We're not trading anything on gamble. We're not picking any news. We are only going to wait for stock of the month. And the stock of the month will be a stock that is breaking out from accumulation, pulled back, and have now gone into an advanced stage. So that's the kind of stock we will be buying. And when we buy this stock, at the end of the month, we'll be able to measure. So if you're going to be hosting our monthly webinar on US markets, we're going to be looking at the performance of each of these companies' stock. So webinar for US markets will not be the same as webinar for Nigerian markets because of the different model that I'm using to run each of these group. So that is what the US market will be focused on. I've given us two stocks right now, and I've backed this stock up with the performance of the ones I've mentioned in Nigerian markets. The US market will give you options. Like here, look at ACHR. The same return, the same pattern you saw on Japan. Can you see here? The same pattern. Decline, accumulation, and uptrend. This is exactly what you saw in Japan, CWG, RLT Preschool, and livestock. It's just for you to have the eye of spotting this kind of company. So my job basically is to scan the market, look for companies that are breaking out from accumulation, now in an uptrend, and then come to the platform and say, these are the kind of stock we'll be trading. Now, the US stock group will be discussing the stock. It's not like a Nigerian stock group. Although I'm glad my mobile app is already 80 to 90% done. The chat room community is what they are working on. And what I've seen so far has been very impressive for me because every week they send me the APK of the app and I download on my phone, I run through and all that. So, and I'm glad that they've been able to deliver a forum that looks like a WhatsApp forum. The same features on WhatsApp, everything. And the good thing about it is that people cannot just come to your DM because you are in the same group. That's one thing I don't like about WhatsApp. Because we belong to the same group doesn't mean anybody should come to your DM. It's porous. See, for me, I feel that's a setback on WhatsApp, which I'm trying to resolve on my member app. So even if you join the same group with other members, nobody can come to your DM. And if anybody wants to come to your DM, there are certain rules the person has to meet. And then that provides some level of security and privacy. So there's nothing like a scammer is chatting me. I'll be able to trace the scammer and know where the person is coming from. And you can't use multiple phone numbers. So that you can't. You will only be able to register with one data. So you see right here, this ACHR. So I've shared the strategy and I hope you look at it and then be able to understand that. Now, for some members that will be asking me, which broker should we go with? What's the best stockbroker? Let me tell you what I use. These are the broker I trade with. And from my experience, I use Bamboo, I use Cheaper Cash, and I use Choice Trade. And you can see that I arrange them according to order of preference, and I'll tell you why. Bamboo is a Nigerian-based company, and I like their method of funding. Very okay, very nice. You can fund with Naira, convert to dollars, and then you wait for your money to be cleared, and you can start buying your stock. The only reason I'm not too comfortable with Bamboo, or one of the things I don't like with Bamboo is that although it's not really a setback, it's not a problem, but I just think for me, it's a bit of a challenge. Bamboo will not give you access to all the stocks in the markets. Bamboo will not give you access to all the stocks in the market. From what I discovered, Bamboo only gives access to stocks that are trading at least 1 million units in a day on market cap above 1 billion. So there are times when you go to Bamboo to search certain stocks, you may not find them. So what if it's a stock that I'm recommending and it's not on Bamboo? Chaka gives you more option than Bamboo. Chaka has more option than Bamboo, but the only problem I have with Chaka is exchange rate. Too high. Exchange rate on Chaka is too high. So that's the only problem. But when it comes to stock options, number of stock listed, number of stock you can access, Chaka has more. There are stocks you buy, even stocks with 400 million, although in my analysis, I would only limit my stock pick to companies that have minimum of $500 million. That any stock below that, because I would have to make sure that they are available on both Chaka and Bamboo. And most likely, I would make sure I pick the one on Bamboo, at least 1 million unit traded per day and then 1 billion market cap. Then on Chaka, my problem is exchange rates. That's the problem. These guys are ripping their users off exchange rates. Exchange rate on Chaka right now is almost around 980. It's crazy, man. So then my third option is choice trade. Now, while you can fund your Bamboo account with a mere transfer, you can do a transfer in Naira. You can also fund your cheaper cash accounts. Sorry, not Chaka. I mean cheaper cash. Sorry for that, please. It's cheaper cash, not Chaka. Sorry for that. Cheaper cash. Cheaper cash. Now, cheaper cash you can also fund with Naira. You can do a transfer and start trading. The only thing I like about cheaper cash is that you can actually sell a stock today and withdraw your money immediately. When you sell your stock, your cash balance will not be in dollars, it will be in Naira. So I think they are using that opportunity to profit from exchange rates. When you sell a stock, they would credit you in Naira. When you want to buy a stock, they will take your money from there. So they are making a lot of money from exchange rates. So which I think is a setback for me. So Bamboo is still preferable because when you sell a stock, you have your money in US dollar. But when you sell a stock in on cheaper cash, you have your money in Naira. And if you want to buy a stock, they will also charge you higher exchange rates. That's too much. I'm just sharing my experience for beginners that are not yet on this platform. Now, Choice Trade is a US-based broker. It's a US-based broker. Choice Trade gives you access to all the stocks in the US market. So it's a US-based broker, is regulated by US financial regulation. So let me open that. This is Choice Trade platform. So if you're looking for a US-based broker that accepts Nigerians, this is Choice Trade staring at you. Now, to open an account with Choice Trade, you must have a domiciliary account. That's key. For for cheaper cash and Bamboo, you don't need a domiciliary account. You really need another account. But for Choice Trade, you need a DOM account because they will require you to verify your account. And for you to verify your account, one of the things is you must send your bank statements. A bank statement to your DOM account. And it has to be the account that you'll be using to fund your trading platform because they will compare. So when you fund your account, they will check the account number on the statement you sent earlier when you registered or verified your account and the account from which the money is coming from. If they are the same, they would verify, they would credit your account. But if they are different, they will reject it and return your money back, and they might charge you for that. So it's a US-based broker. And again, if you're opening an account with Choice Trade, make sure you have all your documents intact. Any inconsistency, your application will be rejected. But I like them because it's a US-based broker. And you will fund them directly via bank wire. It's not transfer. If you want to fund your account, you have to go to your bank, fill a fund transfer form, wire. You will send it to them. Then it will take, most times, 1 to 2 days, the money is reflected. I like them because they are US-based broker. I like them because they give you access to all the stocks. So, but in case you want the flexibility, you don't have the luxury of you don't want to waste time going to the bank, you can as well settle with Bamboo or cheaper cash, which you can fund in Naira. So for some of us that are asking which of the brokerage account is best, you have the option right here. So let me now introduce us to our proper community. Now, I decided to separate Glofolio US from Glofolio Nigeria markets. Why? Because I wouldn't want to miss conversation. I wouldn't want people that are only focused on Nigerian markets to be seeing threads of conversation in the US market. That's why in the mobile app, there was going to be different room. There's going to be a room for US stock. There's going to be room for Nigerian stock. And then I'm also introducing other rooms for to carry at least to help you discuss on other investment opportunities too. So because of that, it's going to be separated. It's not going to be the same. So Glofolio US is different completely from Nigeria with the Nigerian market, and it's a different community entirely. So pending when the app will be out, we've already created a WhatsApp group for that. So that if we're having conversation on US market, let's know that this one is strictly for US market, not when someone is talking about First Bank, the next another person is coming up with conversation about around Apple. No, it's going to be confusing. For people that follow only US market, they will find it disorganized and they will find it frustrating tracking conversations. in the community. And for those that follow US Nigerian stock, they will also find it confusing and frustrating. So I rather separate the two. Then when it's time for us to move to the app, it becomes easier for us. So this platform is different. And number two, again, is that follow US does not automatically give everybody that has access to Nigerian stock. They're different, because I'm actually taking a different route on this. This means there are things that I actually don't talk about. Number one of them is that the tools that I use to run my analysis, I pay for them. So I'm not going to be spending additional time, because that means I have to spend additional time making sure that I run two communities at the same time. That's why I'm building the app. Although very soon I'm working on appointing moderators. I'm working on that very soon to make the job easier for me. So I'll have a moderator for Nigerian market. I also have a moderator for US market, so that I can focus on analysis and ensure that we churn out good picks. So, and that would also depend on the state of the market. But I like the US market because it gives me option. There are more options. Nigerian market, when stocks are already at the top, don't have any option than to wait for the market to come down. And then if there are other opportunities for us to invest, then we'll take advantage of low price. But in the US market, there are different options. In the US market, we'd also be looking at ETF. So Global US will cover ETF. Global US would also cover US stock. And then Global US would also cover opportunities in the US market, Eurobond, real estate investment trusts. So they are two different things entirely. So, and like I shared with you, the strategy that we're going to be using to trade these stocks would be to look for stocks that are actually in their breakout stage, just like I shared. Please, I've shown you how it works, and then I'm also able to adapt this strategy in Nigerian market, only that it's limited. So in US market, we have access to a lot of opportunities. The idea is to see how we can grow our portfolio in USD. It's important. Exchange is not smiling. So we have to be a little bit aggressive by also finding a way to grow our income in USD. So that is it. So these are the things that will come when you subscribe for Global US. Number one, like I said before, you're going to get access to strong buys for the month. So it's not going to come every week and then you'll be overwhelmed. No, I want to limit it and ensure that we follow few stocks until we get results. So here we have new stocks every month with buy and exit price. For instance, if we're starting this month, just like I showed you, we already have that will likely be the stocks for August. The one I shared with you earlier. This is open to everybody, whether you subscribe or not, it's fine. Then we have the one for September. So let's say at the end of August, we'll have new stock for September. I'll just come up with strong stocks for September, and that will be based on the strategy I shared with you. We're looking for stocks that have passed through sell-off, accumulation, and then are moving into the advanced stage. So we'll then mention that in the community. Okay, these are the stocks that we'll be looking at in September. And then we'll also be hosting monthly webinars. So in the monthly webinars, that's why we'll now do a deeper analysis of each of the stocks I have mentioned for September. So our monthly webinar will be more of stock of the month in the US market. Stock for September. Okay, these are the stocks we'll be looking at based on the trend, and I'll show you how each of the stocks has passed through sell-off, accumulation, and then are going into advanced stage. So that's what the stock of the month will be, which will be part of what we're discussing in our monthly webinar. Then I would also give everybody a free automated Excel tracker. So this is why I will share my Excel tracker with everybody. So you have access to download the Excel tracker. Although the Excel tracker is going to be as Google Sheets. So I'm giving you an Excel tracker. So the Excel tracker will give you access. You can build your own personal stock portfolio. So if you have an account with Chaka or Trove, or you have an account with Cheaper Cash or Bamboo or Choice Trade, multiple. So with Excel tracker, you can put everything together in one platform and see how your stocks are performing. So it's going to be personal. So there won't be any Excel tracker for everybody, because we'll only be having stock of the month. So with stock of the month, it will be easier for us to know what stock we are trading for that month. To be easier. I don't want to overwhelm everybody and be saying, oh, we recommend one today, tomorrow, and people will. That's why I've actually delayed launching Global US, because I wanted something that will be more organized so that people can easily keep track of the stock we're buying. Everybody will be on the same page. There won't be anything like, oh, you recommended this stock. What should we do? So at the end of the month, what are we going to do? We will look at the stock we've recommended for previous months, how they are fed, and then we will look at the stock for the new month. Then if the stock for the previous month had hit our targets, fine, we'll discuss that. So I want this to be more organized so that they won't interfere. I'm doing a lot on the Nigerian market already. So I'm coming up with a model that will be easier for me to run so that I can run both at the same time. Once the app is out, it's a freeway, everything will be automated. And then I'm glad on the mobile app, subscription is automated, everything is easier. In short, the app is going to save me a whole lot of things. So I'll just, at least I'll free up enough time to focus on analysis and then having a monthly webinar where I will update us. So for those of us that will be interested in joining Glofollow US, like I said, this is not, excuse me, it is not a must for everybody. It's for only the few people that wants to try out US stock market based on what I've shared so far, and then also wants to diversify their portfolio beyond the Naira. We're not going to be talking about Nigerian stocks, US stocks only. We'll also be looking at opportunities in the US market. So some of the things we'll be looking at in our webinar will be stock of the month, number one. Number two, we'll also be looking at certain ETF that are aligning with trend. Certain ETF. And this ETF will be mostly dependent on what the US Fed is doing. Now, look at what is happening in the US market. Let me share something very important. In the last, at least let's say the last 10 months, 6 months to 10 months, inflation had been trending down. And the number that came out this month was actually very good, 3 point something, far below, close to US Fed target of 2%. Now, that's a sign that the US Fed might be looking at pausing its rate hike. Now, even though they are still trying to be a little bit tight, it's not going to be as aggressive as they've been before, which is why the market has been responding positively or thereabout. Now, there is one sector that was hard hit with this multiple rate hike, and that's regional banks, which led to the collapse of SVP. Now, as we approach the end of this rate hike, thank God inflation is already cooling off. There's so much demand for regional banks in the US. There's so much demand for regional banks in the US. There's so much demand for their stock because their stock was hard hit after the news of SVP collapse and other banks that had issues. So now that inflation is cooling off and we're actually approaching the end of rate hike, then the tension, the sentiment that is actually driving stocks in that sector will be changing. At least, and that perfectly coincide with the second stock I recommended, which is BO, Bank of Hawaii. This is a regional bank. This is a regional bank. So, which coincide with the setup. And that setup here is decline, accumulation. You can see breakout. This is the breakout, pullback, and now we're starting to see the stock. So these are part of the things we'll be discussing in the group during the meeting. Aligning trend with ETF. So that means ETF that tracks regional bank will most likely be doing well as we approach the end of rate hike, because the news on inflation rate has been cooling, at least for now. So which will drive sentiment. The only risk right now is oil that's actually picking up, but we've not seen the impacts on inflation yet. So those are the things we'll be discussing in the market. So if you want to be part of the group, like I said, it's not optional, but like I said, we're going to do a lot. My whole idea is to ensure that we are able to build a profitable and diversified investment portfolio in the US markets beyond the Nigeria. So we're doing both Nigeria, we're doing the US. So if you want to join the group, although I'm still going to discuss that in the community and all that. So I have my details here that I've shared for some of us that will be interested in the group. For some of us that want to join the group right now, this is the guide to join the group. So I'm going to create a WhatsApp group to add you, but this is a guide. I want it to be more organized. Please don't pay into any scammers account. I have been running this community with just one phone number, and I intend not to change the phone number. If I change the phone number, I will let you know. That is why I intentionally do not want to appoint moderators. I have people in the group that can actually be moderators. But because I do not want newbies to be confused on who the admin is, that's why I have maintained one number as admin until we move to the platform. So this is where you should pay if you want to subscribe. And the guide is, once you make payment to this account, just send your receipt to me via WhatsApp and tag it. Please, I need this tag. It's important because that's what I use to search payment for different types. Glofolio US stock payments. Glofolio US stock payments. So when you do that, send the receipt to me via WhatsApp. So I will use that to search all the payments. When I search all the payments, I can then add you manually. I want to monitor this group personally, and I want to be sure that it's controlled. Unlike the first one, this one that we're currently running for US stock markets, everybody is there, whether subscription is, but this one that we're running is only for paid subscribers. So that means we can mention the stock that I recommend. You're free to mention the stock I recommend the platform because everybody in the community will be paid subscribers until we move to the mobile app. So this is how to subscribe if you want to join Glofolio US Stock Peak. First, do transfer. I'm maintaining the same subscription level. I'm not increasing anything. It's fair. For me, I feel it's fair. I've taken my time. In short, there are few people on the platform that actually come to me personally to say, what you're actually collecting as annual subscription is a lot lower than what others. I can pick other platforms in Nigeria. You go and check what my subscription is compared to Money Africa. It's extremely low. But because I'm interested more in knowledge, I want to see how I can spread more knowledge when it comes to investing and trading. That's why I'm not of reviewing. I'm not reviewing for now. So for me, I think this is fair, considering everything I'm doing. And again, if there's need for me to come up with video course on US stock market, I will do it. So there's a lot on table for you if you join the US stock market group. But if you want to maintain the one for Nigeria, perfect. The same efforts that I've been using to run Nigerian market still remain. So I'm not creating another group for Nigerian stock market. That group still remains. This is for US market. And I've shared my reason and why I do not want to separate the group, why I do not want to mix the two together. There are different markets with different offer. I would have thought about the UK market, but my feedback on the UK market has not been impressive. The UK market is not liquid enough as I want. And again, I found out that majority of the stocks that I've always picked in the UK market, they are also listed in the US. So why should I go for, or why should I split effort when I know I could settle the US market and have access to all the stocks in every other market? In short, there are stocks in China, Chinese stocks that are listed in the US market. There are Singapore stocks, there are Germany stocks, there are European stocks, there are African stocks. So there are a lot of stocks in the US market. So I feel the US market actually qualifies as international stock markets more than any other market. So that's why I just jettisoned UK market. So it will most likely be the US stock market and Nigerian stock markets. That's the only two markets I'll be focused on right now. So for those that are interested in joining Glofolio US, you can take the screenshot and then send to me over WhatsApp. Then I will add you. From there, we can then take on our conversation. By the end of this month, first week in September, we'll also be having our first meeting on US stock, where we're looking at the stock to buy for September. But already I've given us access to stock that I'm buying right now for August, and then I'm watching the stocks till I get results. That's how we'll be trading the US stock market going forward. So let me pause here, and I don't know if you have a room to ask a question. So I'll most likely take your question right now. Sorry, it's 1 year, please. It's 1 year. It's 1 year. The tag is 1 year, please. It's the same model as Nigerian stock market. The same model as Nigerian stock market. Now we'll be discussing shorting. Yes, it's part of what there's no limit. There's no limit in US markets. This is not Nigerian market. There's a broker called Trade Zero, which I'm working on right now. There's a broker called Trade Zero, and that broker allows us to short stock. So definitely we'll be looking at it. So I'm going to also come up with a strategy for us to short stocks. Especially, imagine get into stocks that are already overbought at advanced stage. So at overbought stage and are about to go down, they will short the candle. So if you're talking about shorting stock, then we're looking at stocks that actually are at their decline stage. So definitely they were looking at possibilities. So there's no limits. There's no limits. It's already on the screen right here. Look at it here. It's already on the screen. I have it right here. It's same 30K, same as the Nigerian market. There's no difference. It's for 1 year, please. It's for 1 year, please. Sorry. So it's for 1 year. I have it here. The same way we run Nigerian markets. So that is it here. So let me see. Please, for the recommended stocks, does the 15%? Yes, 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 yes. It's trading. I will share more light in the group. The same percentage, 15%, 15, 20%. Yes, it's applicable. Yes. The tag is Glofolio US stocks payments. Glofolio US stocks payments. That's the tag. Glofolio US stocks payments. I'm looking at the question. The stocks I recommended is AUR and BOH. Please, which stock did you okay? I think AUR and BOH. What of Trove? Trove is okay. I'm not against any Trove, any other platform. The brokerage account I recommended are what I've been using. Trove is okay. Trove is perfect. Do you understand? Trove is okay. If you already have a brokerage account with Trove or Chaka, you don't have to open it. It wasn't be the same one that I just shared with you. Chaka, Trove, and Bamboo. Forget the name. They all work with Drive Wealth. They are using the same broker. Chaka, Trove, and Bamboo. They are all using the same broker, which is Drive Wealth. So whether you have an account with Bamboo or Chaka, you actually own an account with one broker, which is Drive Wealth. You don't know. So I just think I should tell you that. Yeah, how about Yocha? Well, I don't have experience with Yocha. And if Yocha allows you to trade US stock, perfect. Perfect. Yes, thank you so much. So I just saw that important information. Remember that choice trade requires $100 minimum account balance and $10 monthly maintenance on non-US account. So that's the disadvantage. So if you're going to open with choice trade, they'll be charging you on a monthly basis for maintenance. So I'd rather you maintain the local one here, which is Chaka, Trove, Bamboo, or cheaper cash. Thank you for that. So I think I missed that. Yes, yes. Choice Trade is FDI approved. FTCI. I've been using Choice Trade for a long time. For a long time. But for the flexibility that it offers, for the purpose of trading US stock and the fact that I don't want to go through the plenty stress of going to the bank, filling form, you can settle with the ones you can fund in Naira. So it's easier. What of Trade? Trade is a Nigerian brokerage account. Trade is not a US account. Trade is a Nigerian stock trading account. It's not a US account. Trade is not a US account. All right. So if you want to subscribe, you can go ahead. That's why I have the screen. You can take a screenshot and go ahead. So I'll so that I can put the everybody together in one platform probably by Monday, Tuesday. We should probably have the platform up and running. So I'm interested in US real estate. Kindly share more information. I will discuss all this in the group. I'll discuss all this in the group. I'll discuss that too. There's no limit to what we can discuss in the US market. Every opportunity in the US market will be discussed, from US real estate to treasury bond to where Eurobond is Nigerian, US stock trading, ETF, mutual fund. We're going to discuss that. So there's going to be a lot of discussion, in short, valuable discussion on our monthly meetings in the US market. So I'm looking at questions, see if there are questions right here. Okay, do you look at fair value price? Now, let me explain this question, fair value, right here. Now, let's look at BOH or AUR. Now, did you know that this particular strategy of picking stocks that are under accumulation already takes into account fair value? Did you know that? What is fair value? Fair value is what a stock is worth compared to the market price, right? Now, imagine how this stock had fallen from a high price of $13 to reach a low of 1.2, right? Now, the people that are mopping this stock at this bottom right here consider this stock cheap and undervalued. That's why I said accumulation stage is that stage where buying volume is equal to selling volume. And what would have attracted buyers to jump on a stock that has been going down for a long time? The answer is simple, because they consider the stock undervalued. This is the leg, this is the step of institutional investors. Why would an institutional investor buy a stock that's been going down for a long time? Because they feel that the stock is undervalued. And how do you know that a stock is undervalued? They've deployed their tools to check the fair value of a stock. So you are using this chart to follow them back to back. That's what it means. So if you ask me whether I consider the fair value of a stock has already been factored in within this accumulation stage. That's why. Why didn't this stock go down further? Why? Because the people buying here that actually saw this dip felt that this stock should be extremely undervalued at this price. That's why you saw this accumulation. Accumulation is a sign that buyers, banks, institutional investors, mutual funds are mopping up the stock from the bottom because they consider it undervalued. That's the power of this particular strategy that I shared with you right now. It's a technical strategy that also have a bit of fundamental built into it, because it's fundamental analysis that would have made them to buy that stock at a lower price. So your own is to look at the footprints of institutional investors in the market. That's your own. Your job is to look at their footprints. So when you spot their footprints, you start monitoring the stock. Now, the moment the stock breaks out from that accumulation, then it's now in an advanced stage. That's when you start. So that should answer your question. That's be taken into consideration. Do we buy at market? I will discuss all this. Right now, the market price of the stock I recommended is okay. Will you set a filter for NASDAQ? All the stocks I'm buying are for NASDAQ and NYSE stocks. I'm not buying OTC. Yes, sure. If you want to do that, you can subscribe for more than 1 year. If you want to do that, definitely you can. You don't have to stretch yourself. Violence for me whenever I understand Nigerian stocks. Don't worry, calm down. If you want to take your time to understand Nigerian stocks, sure you can. The knowledge you've gained on Nigerian stock market, you still need them in this market. Understanding bid and ask. Do you understand? One good thing about the US market is that you would hardly find full bid. Oh, I can't buy this stock because it's on full bid. There's liquidity. How much are you bringing into the market that will make the stock go on full bid? Yes, stocks go on full bid, right? But it's rare. I've not seen that. It's rare. We're buying stocks that are liquid, readily available. You sell, automatically you buy, is there. So there are some things that you would have gotten used to in the Nigerian market that you may not see. Can you mention the full meaning of the brokerage firm so we can register? This is Bamboo, Cheaper Cash, and Choice Trade. This is Choice Trade, choicetrade.com. Then you can, Bamboo is a mobile app. So you can use their mobile app. This is it here. You can see. This is Bamboo. It's a mobile app. So you download it to your phone. Cheaper Cash is also a mobile app. So you can download to your phone. So it makes it easier. It makes it easier. So in the absence of any question, I need to call it a day. It's 8:27 because I have some things to do right now for tomorrow morning. So if you have any question, I don't know how we want to discuss this right now. Maybe I should create well, I will update everybody in the group. But if you want to join the community, you can take a screenshot. I'll send a link to watch a replay of this video. so that people that didn't join us would also have an opportunity to watch the video once more. And then if they want to join, but make sure you tag Portfolio US stock payments and then send your receipts, either your receipt or screenshots, because I want to manually add everybody. Because in this group, we're going to be mentioning stock. There's nothing like don't mention any stock. So I want to make sure that everybody that joins the group are actually those that pay to join the group. And then we'll have access to a lot of opportunities in the US markets. So thank you so much. Do enjoy the rest of your nights. I don't know if you have any question right here. Even though the goal is to trade US stocks to Bamboo and Chipakat Pro. Yes, the process dividend. Yes, the process dividend. What will be the take profit percentage? Between 15-20% that we've been discussing. 15-20% is still fine. 15-20% is still fine. All right, thank you so much. If you have any question, I will probably give room to for you to ask that question later on. Or if you want to come to my DM, fine. You can actually come to my DM and ask questions. But I'll find a way to give room for questions for those that want to join or those that have questions that need clarification before they can join. So you can take a screenshot of this, and if you make payment, send to me via WhatsApp. I will add you to the community. Thank you so much, and do enjoy the rest of your night. And I wish you a profitable week ahead. Bye.